Y'all, welcome back. I'm Raymond Dahlman, and this is the weekly economic update for June 7th, 2021. I hope everyone had a fantastic weekend. It was pretty nice here in Colorado. A little warm, actually, but I'll take some warm weather any day. See, we got some chores done around the house, got a bunch of junk taken out of the garage, which was nice. Now my wife could pull her car in there, maybe. Let's see what else we did. That was about it, pretty much. Astros won 2 of 3 in Toronto, which was good. They're off to Boston tomorrow night, so it's an off day. So I'll be pretty bored this evening, unfortunately, because well, I guess I'll watch the other teams play. But without the Astros, I'm a little lost in the evenings. So all right, well, let's go ahead and dive into the updates. The first one I'm going to cover is the monthly economic update for May. This kind of recaps everything that happened last month. As we know, stocks traded in a fairly narrow range in May. See, the Dow Jones was only up 1.93. The S&P was only up 0.55. NASDAQ was down 1.53%. As far as earnings, they were pretty good, with 95% of S&P companies reporting. 86% had positive earnings, so not too bad. Estimated earnings growth was 51.9%, the highest rate since first quarter of 2010. Now, don't get too excited. I mean, we are coming out of a self-inflicted gunshot wound. So, anything that's the highest since X, if we hadn't had what had just gone on the last 15 months, and we had the highest month ever since 2010, I say, wow, that's amazing. But after we've hamstringed ourselves over the last year, I mean, it's good news, but let's not get too excited. So inflation, I know I've been yapping about this since probably last summer when all these stimulus bills were in the works, or at least the first ones. As of, and I know I covered this a few weeks ago, the 6.2% year-over-year spike of the producer price index. Pretty big jump, again, the highest since 2010. So, the Fed seems to be downplaying inflation. I'm not trying to, sway it either way, but you just can't continue to print money and expect that nothing bad's going to happen. All right. As far as the sectors that did really well, let's see. We had gains in communications, consumer staples, energy, financials, healthcare, industrials, materials, and real estate. The losers were consumer discretionary, was down 2.98%, technology 3.61%, and utilities 1.34%. So, I'd say, was that about 2/3 were good, about 1/3 were bad. So, certainly some good news there. What are investors going to be talking about in June? Inflation. It's probably been the biggest story the last few weeks, at least on my TV. I don't watch a lot of television, but I do keep the business channels on just so I can see what they're yapping about. And right now they're talking about Bitcoin. They claim it's a scam. Those are Trump's words, not mine. I personally like Bitcoin. I like all forms of currency that are outside the domain of the federal government. And, the faster we can get our wealth away from, the taxing powers, the better. So, all right, world markets, blah, blah, blah. All right, well, here's some key indicators. GDP, the second estimate of the first quarter GDP has remained at 6.4%, so good. Employment, 266,000 jobs added in April. We know that was well below expectations. Unemployment had ticked up to 6.1. Retail sales were flat in April. Housing starts declined 1.5%. Housing starts were 39.2% higher year over year. Let's see, the CPI, obviously we've been talking about that. That's been jumping. Durable goods orders did fall 1.3%, registering the first monthly decline in 11 months. So again, not surprising. Let's see, the Fed, we talked about that a few weeks ago. All right, let's move on to this week's weekly update. We had a strong but not too strong week. Unemployment sparked a bit of a rally. If you watched last Friday's video, I talked about how the market kind of dipped midweek and then rallied Thursday and Friday. Let's see here. Sector rotation continues since markets have traded sideways since mid. Sorry about that. My computer stopped for a second. Like I was saying, markets have traded sideways since mid-April, though beneath the surface has been ongoing sector rotation. Stocks ended on a strong note. The performance of industry sectors varied widely. Energy and real estate, utilities, and a number of reopening stocks performed well, while consumer discretionary, communications, healthcare, and technologies lagged. The labor market recovery, we talked about this last Friday. The ADP jobs reported on a big jump in the private hiring sector of 978,000, and the monthly employment report saw an increase of non-farm payrolls by 559,000. So, but again, it did fall short. The unemployment rate did decline to 5.8%, and but the bad news in that, I know I covered this Friday, was that the labor participation rate is still, it actually shrank a little bit. So, it's kind of a mixed bag right now. So let's see. All right, some economic data coming out this week. We have job openings and labor turnover on Tuesday. Thursday, we have the CPI and jobless claims. Friday, consumer sentiment. Some companies reporting earnings this week. We have Marvel Technology, Coupa Software, Campbell Soup on Wednesday, Brown Forman Company, never heard of them, on Wednesday, and Chewy, my dog's favorite food supplier, on Thursday. Alrighty, so let's go ahead and jump into some articles here that I am disseminating. Let's see, recovering from COVID. This is, with COVID, there are some who believe progress on the health issue is necessary precondition for an economic recovery. I personally don't think so. In recent weeks, the CDC has reported that 295 million vaccinations, or 51% of Americans, have had at least one injection. I'm not sure. You'd have to go to the CDC to see what that reference is. So, I mean, I guess it's good. Me personally, I'll wait a couple of years to see how this turns out. I hope for the benefit of everybody that nothing bad occurs, but we'll see. All right, next article, a 7-year high for gas prices. Let's see here, with the Colonial Pipeline outage a few weeks ago, the average price jumped up to $3.04 a gallon. It's $1.08 higher than last year's pre-lockdown prices. Oil prices have also jumped. I think last night when I was looking at the futures, oil was around $70 a barrel. So that is a significant climb over the last 14, 15 months. So I don't know if that's going to, with demand increasing as more people start, driving and getting back to normal life, I imagine that gas prices at the pump are going to continue to climb. Now if we open up, more drilling and, increase the supply, that should help bring down prices, but I'm not holding my breath right now. All right, a COLA with your Social Security. Preliminary estimates call for a 4.7% cost of living increase. I don't know if that's going to happen. I know that the legislators have always been very leery about large jumps in Social Security COLAs, but with everything that's been gone on this year, I don't know if a 4.7% increase in the cost of living is going to do much for Social Security recipients. With the cost of food that's gone far higher than 4%, so a couple of crumbs isn't really going to help those folks out. So we'll see. All right, here's a good article that was in my email box this morning. Comes from First Trust. Brian Westbury is the chief economist there, and just going to read a couple paragraphs that really caught my eye. And it starts out, or this paragraph, governments tried to cover up the often self-inflicted pain with, and this is talking about the recovery. There's nothing normal about this recovery. So it starts out, tried to cover up the pain with money printing and borrowing. It's like giving morphine to someone injured in a car accident. It masks the pain but doesn't mend the injuries. The divergence of economic data shows this clearly. The U.S. is still 7.6 million jobs short of where it was in February of 2020, yet retail sales, which fell 20% during the year ended April 2020 rose 51.2% since then, more than fully recovering. In the past 24 months, total retail sales are up 10% per year on average versus 3.6% growth from 2014 to 2019. The only way this is possible is having the government borrow, print, and distribute money for the people to spend today. So the continued stimulus is gonna cause problems. I know I'm just one guy here yapping alone here in my freedom bunker, but it's I don't know what it's going to take for those in Washington to pull their heads out of their asses and stop spending our money. But at some point, it's going to come crashing down. So the way I look at it is we can either do this voluntarily, or it's gonna be really bad when the wheels come come off. So it's kind of like your car. Do you drive it till the wheels come off and you're driving 80 miles an hour, or do you service it regularly so that you don't have to worry about that sort of stuff? So I don't have a lot of faith in the fools that work in Washington. So, but maybe I'm wrong. Maybe I'm completely off and everything is just peachy and the world will go back to normal, but I just don't see it. All right. Well, I have a couple of things to share as far as some information or some entertainment sort of. And so the first one here is a podcast I listened to, I think, over the weekend. It's from Pete Quinones. His podcast is called Freeman Beyond the Wall. And this one is Exposing Anti-China Propaganda with Scott Freeman. And Scott is he's an American who was born in Atlanta, and he's lived in mainland China for the last 20 years. So it's interesting to hear someone who is an American, living over there, and their perceptions of what, the garbage that comes out of our media about other places. So let's go ahead and take a listen, just a couple minutes, and then we'll move on to the last thing I wanted to share.
All right, man. I got to bring this up because I've used it in my writings. It's a fact. Okay, we need to talk about the Chinese social credit score system, and
right.
I've written about it. I've used it as an example of what could be coming here and what's being set up here, especially through COVID-19. So, tell me how obtrusive and how horrible, in your opinion, and what you've experienced being in Shanghai, a city that everyone's heard of. It's not like you live in small town China.
How horrible it is now.
How horrible is this Chinese credit score system?
Well, as we talked about earlier, I often start with that, and I often say, well, if I want to shake people up a little bit and say, maybe you really should reconsider whether you're getting an honest version. I often use this example because this is such a blatant example, and it's blatant because this so-called social credit system does not exist. It's a complete fabrication, and that the fact that thousands of articles have been written about it doesn't change that. And if you want to say, well, how can that be? Well, it's because there's an agenda behind it, and you can ask yourself that question, why that is. But if you want to get a version of the truth, it's actually not too hard. All you have to do is look up there's an article about it on Wikipedia, and it's not completely honest, the article. It's a little bit twisted, but it pretty much says the truth, which is that it doesn't exist. It's just an idea. There was a discussion about this idea a couple of years ago, and there was a paper. Somebody in government, wrote a paper about it. So, we could do this thing. It'd be interesting. It'd be useful. And some people in the government said, we can talk about it. Maybe we can do some tests here and there. But it never happened. Maybe it will happen one day. I don't know. But if you read Western accounts, you would be hard pressed to read a newspaper account and realize that thing didn't exist. Every now and then, if you read carefully, you'll see there's something about this was proposed by or something. So like there are hints to it, right? But it's not easy to read that and realize that actually it doesn't exist. And then the way the propaganda is constructed is actually very clever, because they'll take bits of truth and they'll build it in. And so what they do, one of their favorite examples, one of the favorite bits they build into is this, the travel restrictions that exist for some people. And they say, oh, it's because the person has bad social credit, or whatever they call it, social credit score, so they can't travel. Well, it's true in China that travel restrictions do exist. It is a concept, And it's kind of one of China's approaches to dealing with bad debts, or debtors, basically, that what's that word in English? Basically, people that just don't want to pay, right? So if what's that called in English? Tell me what that word.
Oh God.
What's that word?
I know what it is. Go ahead. Keep going. I'll figure it out.
Anyway, yeah. So basically these are the people where a court, there has to be a court order. The court says, well, we think you really have the money, but you just don't want to pay. So don't throw them in debtor's prison. No, instead they say, okay, well, we think you really should pay. So until you agree to pay, we're going to put some travel restrictions on you. So you can only take the slow train, you can't take the fast train, and you're not supposed to take taxis. You can, walk or take the bus. Basically, they just try and make life inconvenient for you until you agree to pay. So this exists, and it's a concept that you could think it's good or bad. I'd say there's some arguments for it. It's better than a debtor's prison, but it exists, and then it's...
Stop that there. It's a very interesting listen. It's about a little over an hour, so I'd definitely recommend giving this a listen of your time. It's just an interesting perspective from somewhere else, and not to say he's 100% correct, but it is interesting to hear another American's view of our media and how they portray the China and the Chinese government. So, all right. And then the last thing I wanted to share, this is a suggestion from my wife. She suggested Mare of Easttown, which is on HBO. It's got Kate Winslet in it. I really don't know much about it, but she said it was a very interesting, and so she really enjoyed it. I heard her in the other room watching it over the last couple of weeks. So that's her suggestion to you guys out there. Feel free to, I think most people either have HBO or know someone that you can download the app and use their login. So, but that'd be my things to listen to and things to watch over the next week if you have a chance. So, all right, well, that's everything I had so far for today. If anyone has any questions, comments, or concerns, feel free to give me a call or shoot me an email. Be sure to like and subscribe, share with friends and family. I would appreciate it. And if anyone needs anything from me this week, I'm in town. I'm not going anywhere. So just give me a ring if you need anything. And talk to you all on Friday, and have a great day. Bye-bye.